Now on BBC News, the latest from New York and around the world. Business Today.
This is Business Today, live from New York at the opening bell, where traders are shaking off concerns over bank credit. Tariff takedown. President Trump says his plans for higher import taxes on China aren't sustainable, as he confirms he will meet President Xi. And no steam ahead. A landmark deal to cut global shipping emissions looks set to fall apart under pressure from the U.S. Hello and welcome to Business Today, live from New York. I'm Erin Delmore. Now let's start in Washington, D.C., because the White House has been offering reassurances on both the health of the U.S. banking system and on U.S.-China trade. We'll have more on the banks shortly, but when it comes to trade between the world's two biggest economies, President Trump says that the higher tariffs he's threatened to impose on Beijing are not sustainable. He also told Fox News that he thought things would be fine with China after he meets with President Xi at the end of this month. Now, tensions have flared since China said it would impose new export controls on the rare earths that are essential to so many modern electronics. Beijing has since defended its controls as legitimate. Now, these trade tensions have been dominating this week's meetings of finance ministers and central bankers at the International Monetary Fund in Washington. And my colleague Michelle Fleury is there for us. So, Michelle, run us through what is the latest.
Yes, I mean, as you mentioned, Donald Trump coming out this morning in an interview basically saying 100% tariffs are not sustainable. That's certainly the case. I mean, that would reduce trade between the world's two most powerful countries to zero. It would grind things to a complete standstill. And there is a recognition both between the White House and China that that's obviously not the desirable outcome. Now, all of this, of course, is casting a long shadow over this week's IMF and World Bank meetings. You've got central bankers, finance ministers around the world sort of watching this squabble playing out in real time, some back and forth going on. We saw earlier this week Treasury Secretary Scott Bessent basically saying it was the world versus China. And that everyone should diversify supply chains. So there has definitely been an escalation of tensions. All of this, of course, coming ahead of potential talks and a meeting between President Xi and Trump in 2 weeks' time in South Korea. Is this a prelude to a deal? We just don't know at this point. But the chatter here is that people are concerned. If you look back at the IMF's forecast, you know, one of the kind of clouds on the horizon for the global economy is trade. And when you're talking about the two world's biggest economies, this obviously clearly would be cataclysmic if things were to escalate. Have a listen to what Reza Bakir, a former IMF official and also a former government official from Pakistan, had to say to me earlier this week.
I am very concerned that if the tariff wars are not kept contained, there will be a very large impact. Without doubt. And I still firmly believe that at the end of the day, trade wars, especially when they are reciprocal, will be bad for the world as a whole. But that said, I think there is a question around, can tariff policy be used effectively for pursuing national goals? And if so, what are the limits around that? Now, the IMF, the World Bank, are multilateral institutions. These discussions need to be happening in the board of the IMF, not at a bilateral level.
Michelle, is there a sense among leaders of other countries here that the U.S. could end up moderating its stance, specifically against China, when it comes to some of these higher tariff threats?
Well, I mean, I think you heard at the end of that answer there from Reza Bakir, you know, he was saying bilateral talks, in other words, talks between two countries aren't the way to do things, but that seems to be the president's preferred method. And of course, there is hopes that maybe there will be perhaps another truce. But again, when you have an escalation of tensions, there is always the danger that things could go wrong.
All right. That's my friend Michelle Fleury in Washington for us. Thank you so much, Michelle. Now, let's turn to the financial markets here in New York, where in the last 24 hours, we've seen some renewed concern around the health of the U.S. banking system, and specifically some of the smaller regional banks. Now, traders this morning have been sending shares on the rebound. We're seeing the Dow up around 0.2% at the moment, the S&P looking a bit flat, and the Nasdaq down actually around 0.25 percentage point. Now, more narrowly, shares in two regional banks, Zions Bancorp and Western Alliance, have recovered some of the losses that they saw after they said they'd been hit by either bad or fraudulent loans. In the last few hours, European banks have also recovered some of their losses after being spooked by worries of contagion. So to discuss all of this, we have Ed Yardeni, president of Yardeni Research. Ed, a big question right now is about whether these concerns about bank credit are a one-off or part of a broader issue. I remember Jamie Dimon saying that when you see one cockroach, there are probably more. What's your take?
I think there are clearly a few cockroaches out there, but I don't see an infestation. So put me in the, kind of a contained, narrow problem in the banks, particularly the regional banks. The large banks reported, and they seem to actually have done quite well, particularly with investment banking. So the bottom line is I don't think this is going to be 2008 all over again.
You do make a good point that when we saw the larger banks reporting earlier this week, we saw some real gangbuster results. You know, There's talk about how this could be a bit of a bifurcated market at the moment. What do you see, and how are you advising the people around you?
Well, I see this as an opportunity to buy small regional banks on any significant sell-off because some of the large banks are likely to scoop them up. This could be actually setting the stage for a lot of acquisitions by the large banks to consolidate the banking industry if, in fact, they can get some good bargains among the regional banks. So. And again, some of these issues that have popped up seem to have more to do with fraud than with a bank officer making a bad decision on the credit quality of a borrower.
Yeah, and you know, when we talk about value here on a slightly different front, the cost of borrowing is assumed to be getting quite a lot cheaper in the next couple of weeks or months. The Federal Reserve is anticipated to make maybe even a half-point rate cut, either in September or in September and December. So how does that change the way the market looks going forward for the rest of the year?
Well, it's not clear. It wasn't clear before the government shut down that the economy really needed lower interest rates. The Fed funds rate's been at 4% for a while. The bond yield has been above 4% for a while. And yet second and third quarter numbers for real GDP are coming in at like over 3.5%. So GDP looks pretty good. The labor market, however, has been kind of funky. There's a lot of different things going on there that don't necessarily require the Fed to lower rates, given that the unemployment rate is 4.3%. But the bottom line of it all, yeah.
Sorry to cut you off there, Ed. We are going to have to leave it there for time, but I promise we'll have you back as soon as we can.
Okay, my pleasure.
Ed Yardeni. Now, a plan to introduce a new carbon tax on global shipping looks like it's going to fail to get the backing it needs to come into force. The idea is to raise billions of dollars to fund the green technology, which would reduce emissions from an industry that's responsible for 2% of carbon emissions. Countries are meeting at the International Maritime Organization, which is a UN agency in London, where they were set to adopt the plan that has been years in the making. But late on Thursday, President Trump called it a scam and said that it seems it has enough support to stop it from coming into force. Well, Richard Mead will break it all down for us. He's the editor of the shipping industry journal Lloyd's List. He's actually at the talks right now. So, Richard, tell us, what's the plan and why does it look like it's going to fail?
Well, I wouldn't say it's definitely going to fail right now. They've just gone in behind me to finalize the decision. It is on a knife edge. This was an agreement that was basically agreed by all 176 member state governments back in April. Since then, though, what we've seen is a coalition led by the US with Saudi Arabia and several other petrostates really pushing back against that agreement. And we've seen a number of states that were previously in favor have reversed their decision. And it's pretty much 50-50 now as to whether or not it goes forward. Now, even if it does get agreed and adopted, it is no guarantee that we will actually see this come into force because there is a 10-month period after this adoption where you could still see that pressure from the US, ultimately see this pushed into the long grass, politically speaking, for several years to come.
Well, you mentioned pressure from the US. How much of this has to do with President Trump and the tariffs he's imposed?
An awful lot. As I say, this was something that's already been agreed. We should be at the adoption stage now. This is a political campaign from several member state governments to really try and push back against what Trump has described as an environmental slush fund. It's nothing of the sort. What it is an attempt to bridge the gap between the current fossil fuels that shipping runs on, it's accountable for that 3% of global trade, and the price of fuels that will be zero carbon down the line. Now, that's going to cost an awful lot of money. Conservative estimates somewhere between 2 to 50% more than the current fossil fuels. Now, you need to bridge that gap in terms of the price. That's what the money was there to do, to try and get us from fossil fuels to sustainable fuels. What we're going to end up with is a global patchwork of regional frameworks, much more expensive, frictional trade. It's going to be a lot more complicated and a lot more costly to do shipping in the future if we don't get this agreement.
Well, exactly. I want to hear a little bit more on that now. If it does fail, what do you see is likely to happen, and what could it mean for consumers?
Well, ultimately, what you're going to see is an end to this idea that we have a globalized carbon price for shipping. Shipping is a global industry. We move billions of tons of trade around the world. It needs a global regulation. But instead, what we're going to have is a patchwork of these regional frameworks. Now, that's going to be much more expensive. It's going to be much more fragmented, costly, complicated for shipping to navigate. Ultimately, it adds cost onto the price tag of globalized trade. Now, it won't be an immediate impact, but taken together with what we're already seeing with tariffs and a bifurcation of trade where shipping is essentially being weaponized and driven down geopolitical lines, it basically means that shipping becomes a lot less efficient than it has done in the past.
Wow, shipping becoming weaponized. What words. Richard Mead, it's such a pleasure having you join us live from the talks. Thank you for making the time for us this morning. All right, now in other news, the Dutch Supreme Court has denied an appeal by Russia against a $50 billion arbitration award it was ordered to pay to the former shareholders of now-defunct oil producer Yukos in 2014. The ruling follows years of legal wrangling in Dutch courts. And the ruling found that Moscow had violated its international obligations by taking actions designed to bankrupt Yukos, formerly Russia's largest oil company. And shares of Novo Nordisk, the maker of weight loss drug Ozempic, after Donald Trump promised to sharply lower its price in the U.S., have fallen. At a press conference Thursday, Donald Trump said the price of Ozempic would be much lower once negotiations with the Danish company had concluded. That's all for us here on Business Today. Brief little market update for you. We're seeing the Dow ever so slightly up and the index is flatlined. That's all for us this morning. Stay with us here on BBC News.